In this video, I want to walk you through my thinking process when I come to my charts and analyze the market. Okay, this will be a great video for you because it gives you insight into how I analyze the market and come up with my plan for the day. Okay, so I've already done a video that I've posted on my YouTube channel. It's also on my Twitter profile about the higher time frame directional bias. Okay, so I'm not going to repeat that here. From that video, you know my bias is bullish, higher time frame. Okay, so you need to have a bias, right? Without a bias, you really can't come up with your trade plan. Okay, so let's look at a 15-minute chart. Okay, so directionally, I'm bullish, right? Now, I could be wrong, but I need to have a bias on where I think the market's going. And I've walked through the process of how I established that in my previous video. Go and have a look at that, okay? So my directional bias is bullish. Now, day 4, I'm going to be looking for longs, okay? Now, today is the last day of the week. It's Friday. It's basically the first week of the new month, okay, because it's August, but it is the last trading week of the month, really, right? Because the Friday is the end of the week, and this is kind of a mix between the end of July, start of August, okay? July monthly highs are still intact, right? And the weekly highs are still intact, okay? Now, this is Thursday, yesterday's trading, and look how the market went down. That entire down movement was the manipulation. So that was the dump for the pump, right? There's a dump, and now we've started the pump, okay? We have tapped into yesterday's high, which is also the high of the week, okay? However, we've still got some highs over here, which is the high of the month of July, okay? Now, if you look at this on a 4-hourly chart, okay, what do you see here? This is the market maker buy model, okay? Where you have a consolidation up high, okay? This is where the original consolidation started. And then you move down to a key level, so whatever that level is, okay? And then you can see we have the smart money reversal. We start going up, 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 okay? And now we have this consolidation, something I've also spoken about. I think I spoke about this type of consolidation in a video yesterday, where we have a consolidation prior to or just below a high, okay? Now looking at this chart, you can kind of see that the market's reaching for something. Now that reach could simply be the gaps that we've just come into. That's possible, okay? That's very possible. Or that reach could be these equal highs, okay? Now, directionally, long high time frame, I'm bullish, so I am only looking for longs, okay? And as I said, yeah, that could be the wrong assessment, but I need an assessment. So what I then do is look at, okay, I know that could be a target because that's a high. It's the high of the previous month. We're kind of moving up towards that, okay? Can I do some type of analysis or calculation that confirms that that could be the target? Can I come up with a mathematical target that aligns with that high, right? That's how I kind of look at ways to align my thinking of where I think the market's going with some sort of confluence, okay? So on a 15-minute chart, that entire day yesterday was the dump. That was Thursday, okay, as I said. So I'm going to just take that entire movement from the high, okay, and the low, and I'm going to consider that entire day to be the dump. Well, actually, let's do this. It's probably more realistic if I just take the high from Asia, right? The initial Asia, it's actually over here. I'm looking at the wrong side of the chart. Give me 1 second. It's actually this. This is what I want to do, okay? So I want to take this. This is the down move at the start of the day. This is Asia, this is London, and then we move up. So that there, to me, was the manipulation, okay? We have the dump for the pump. So what I want to do is I'll take that high, and I'll take that low. Whatever that range is, I now want to project the same amount higher, okay? That's how I like to forecast targets. I've shown you how to do this. So I'm going to use my fib tool and take the high and the low, okay? And notice that midpoint, that's the range, okay? This was the high, that was the low, okay? ICT calls that the dealer range, okay? Anything below that is discount, anything above that is premium. So this here was all discount pricing, okay? Push it up, premium pricing, come back down, discount pricing, and now we're at equilibrium right now at this point in time, okay? So I will now take that and project that up an exact same amount and see where does that come into. And why can't I see that line? There it is there, okay? So now I have a mathematical target based on previous price action that I'm now using to forecast a movement at a high. Now I go to the 4-hourly chart. Now I can see, okay, that level is pretty close to this high. There's that high. I have now alignment when the market takes out a high, it typically goes a little bit above. You're not going to just stop right there on a dot. Sure, we can, but it wants to take stops. It's got to go a bit above. So can we potentially move to that level? And the answer is yes. Sure, we could be wrong. We might not get there. But we need some information. We can only work with the information that we have and then combine that with experience that we have, right? And understanding of price action, right? And combine that with our bias, where we think the market's going, right? So my assessment is that the market is directionally bullish. My understanding of price action is that the market, the draw and liquidity are previous highs and previous lows. That is a key high. Above there resides a lot of stops. And I've spoken about this in my previous videos, so I'm not going to go into a lot of detail now. That high there, those two highs are relative equal highs. All that there are relative equal highs. I've now got what I see in the chart, a high, and aligned it with a mathematical target. Okay? And so that to me, from my trading plan, is acceptable. Okay? So I'm going to be trading in alignment with my directional bias. Does that mean that I'm going to be targeting a trade all the way up there? No, it doesn't mean that, because you know that I look for the easy targets. Right now, for me, that there is the easy target. That there is the current high of the week. Okay, so jumping down to a 15-minute chart, Asia is just opened. I might look for a setup at Asia 9:30 or London 2:30, right? London session. The times I'm talking about are New York times. Okay, so Asia is 9:30 p.m. That's the time to enter. From my experience, sometimes it moves earlier, sometimes it moves later. You've got to look at the market and look for your setups in alignment with your directional bias. So if I don't trade in Asia, I probably won't trade in Asia. I might look at this in the London session, maybe 2 a.m. or 3 a.m. or 3:30 a.m. Or New York. Most likely this market will move in New York because we have news at 8:30, right? That's most likely when this market will move. And that is most likely when I will look for a setup, because I think we're just going to consolidate or go up, go down. I think the real move will occur during the news time. Okay. Now, if we are already at the high of the week prior to the news, then I'm probably not interested in the market, because then I really don't have anything that is in alignment with my directional bias. Okay. So I just wanted to give you a little bit of insight into how I look at the markets at the start of my day and how I kind of plan what I'm going to be looking for prior to the open of those sessions. And then at the right time within those sessions, I look for signatures in alignment with my directional bias. My directional bias right now is bullish. So at Asia 9:30 p.m., I'm going to be looking for any scalp trade that I can get, looking for bullish ICT signatures, bullish order blocks, bullish breakers, movements into support zones like down into fair value gaps. Okay, those are the things that I'll be looking for on smaller time frames. Okay, hope the video was useful. Monitor the chart, come up with your directional bias. Look at the key times at each session. Look at PM session, the 2:30 p.m. Asia, 9:30 p.m. New York time is the Asia session key time. Look at the European London session. Look at the times around 2 a.m., 2:30 a.m., 3 a.m., 3:30 a.m. Look at what the market's doing there. Okay, in my trading yesterday, I showed you a very important lesson. I hope you took a note of it. And it was some of the shorts that I did earlier in the day. I did a short at 3 a.m. Okay, I'm going to go back to it, but there are videos on this already, so go back and look at the previous videos. Here we go. That there. Now, even without looking at the time, I know that was a movement. And I know that was probably at 3 a.m. just by looking at it, right? You want to see displacement. Displacement in alignment with your direction. On this London trade, I was looking to short because at the first half of the day, I had a bearish directional bias. Okay? I saw the displacement at 3 a.m. That's when I looked at the market for an entry. That's what you've got to find. So when you're looking at 9:30 p.m. Asia time, you need to find your displacement, okay, for your setups. Looks like Asia's already moving at 8 p.m. early open of Asia. That could be a false move. Then we come back down, and then the real move begins. I don't trade. The key time is 9:30 p.m. for Asia. So look at this market, 9:30 p.m. If that's not a time you can trade, then look at the next time, the European session, 2 a.m., right? 3 a.m., 3:30 a.m. or 2:30 a.m. is also a key time, right? You've got to see displacement at those times and then look for your signatures in alignment with your directional bias. It's all about timing, okay? Hope the video was useful. You've now got to go do the study. Go and look at the charts that I have provided to you in advance on all the trades I've done over all the videos I've posted. You've got to go and do your study. Today, do study live. How does the market behave at 9:30 p.m.? That's the Asia time. How does the market behave in the European sessions? Right, in the London session. Those times are 2 a.m., 2:30 a.m., 3 a.m., 3:30 a.m., 4 a.m. You don't have to be trading all those times, but in one of those times I've mentioned, there will be displacement where you'll be able to identify a setup in alignment with your directional bias. If there is no setup, then you wait. There might be consolidation today all the way up to before the news release. If you aren't confident, if you don't understand price action, if you don't know how to manage your risk, if you're not disciplined, if you don't have a trading plan, stay out of the market. The news at 8:30 is going to be very volatile. Okay? Don't trade it. You don't have to trade it. There are plenty of opportunities that I've shown you outside of the news times. You don't have to trade that. And you shouldn't trade that because it's very volatile. Okay? I will now talk with you in a future video.